Stephen Saywell is head of foreign exchange strategy for Europe at BNP Paribas. Very warm welcome to the Pulse to you. So, I mean, I've got to start, we'll get to the dollar in just a moment, but I've got to start by asking you about the yen, set for a sixth weekly decline versus the dollar. Is there momentum there for further weakness in the Japanese yen?
Well, I think it's interesting you started off by talking about the Fed and the US Treasury market. I think that's really what's driving things here. Certainly our view is that this is a significant move, this move higher in Treasury. We're seeing it across the curve, certainly at the short end, but probably getting more aggressive as we move out the curve. And really what this is doing is driving the dollar higher. It's a significant move in foreign exchange markets because for most of the past few years, we've been trading in an environment where very, very low US yields have been keeping the dollar very weak. So this turnaround where we're actually starting to see US yields move higher, we think is the real catalyst that's driving the dollar higher here. And we think in the coming months there's probably more upside to go.
All right, so US Treasury yields, in your view, the main driver in FX at the moment. So this means that the dollar rally will continue.
Yes, absolutely. I think you hit on it previously. We've seen very strong numbers out of the US. Usually these are upside surprises to what the expectations have been. That's been the trend for the last few months. And I think really what we're starting now is that the market is siding with those stronger numbers rather than giving the Fed the benefit of the doubt with its very dovish rhetoric. And I think as this battle continues to play in the markets, the dollar is really going to side with yields.
What can we expect from the Bank of Japan in terms of further monetary easing, and to what extent is that going to drive dollar-yen in the next few months?
Well, that's a really interesting question because we actually believe that the Bank of Japan is actually not the key driver of the yen here. Remember, the Bank of Japan has been easing for some time. It's been expanding its balance sheet for some time, but it hasn't really had a big impact on the yen. The yen has continued to strengthen, certainly over the past 12 months. We think the turnaround that started earlier this year has been very much driven from the US side. So once again, I think it's a dollar move, and I think it's being driven by the US Treasury market.
And of course, traders right now betting that we're going to see a rate rise we're going to see a rate rise essentially next year. So ahead of the Fed's forecast, what are your thoughts on that? Do you agree?
Well, interestingly, I'd probably bet against that. Certainly, the view of us here at BNP Paribas is that the Fed is likely to maintain its commitment to effectively zero rates through to 2014. But I think what I'm focusing on here is more how the market is going to respond to that. And I think in the near term here, while we continue to get very strong numbers out of the US, equity markets do very well, yields potentially move higher, that combination is a positive one for the dollar.
Do you have lower expectations for QE in the US, and does that mean that there will be less money available for investing in high-yielding emerging market currencies? Will they continue to fall, the Asian currencies?
Well, I think that's quite an interesting one as well too. Ultimately, I think the jury's still out as far as QE is concerned. The Fed will need to make that decision effectively at the end of June when the current Operation Twist that's been coined by the market expires. And I think what's going to determine whether the Fed does go to QE, or the so-called QE3, is really how the data looks between now and then. So we've still got a couple of months really before the Fed has to make that decision.
All right, thanks very much indeed. Stephen Saywell, head of foreign exchange strategy for Europe, BNP Paribas. Thank you.